All right, Tesla update. But in this video, I'm going to go over trading strategy. Just this general principle of how to trade and just being patient and just knowing what I'm about to say will help you dramatically because what it's going to do is it's going to cut your losses and it's going to give you potential to make bigger gains on the moves. What do I mean by that? So basically, we're in a trend up. It's pretty obvious. We have a fourth wave going on right now. And we know it's probably going to go up. But does that mean that you should be buying calls here or buying shares here? Even though it's a fourth wave, should you be buying anything right now? Calls, shares, Tesla L, any of that stuff? And I'll probably shock people. I'll say no. I say no. You should not be buying anything long here. Why not? The reason being is you are technically catching a falling knife here. Even though we think it's going to be a fourth wave, you are guessing that it's going to stop right here. What if you wake up tomorrow and it goes down to 280? And you just bought up here because it's going to be a fourth wave. I'll buy up here. And now it's at 280. What are you going to do? Are you just going to hold it and it goes down to 260? I'm not saying that's going to happen. That's unlikely to happen, but it is possible. What would be the smart way of trading this? We know it's a fourth wave more than likely. What should you wait for? I know that it's kind of hard on Tesla because this stock gaps up a lot, but technically you should be waiting for this to go like this first and then retracing and then buy right there and have a stop below the low because we know we're looking for an impulse on the next move up. So instead of catching a falling knife, where's your stop loss here? You don't have a stop loss here. It's a fourth wave. You're guessing it's a fourth wave. Yes, it's most likely it's a fourth wave, but you're also guessing here. You should wait for the trend to resume. And let's say it does go like this. Then you know the target is likely above here. You could scalp some. You'll miss the move, a lot of the move, but you can scalp a lot of that up here knowing it's probably going to go to 400 and still make some pretty good money. You wouldn't make as much money if you guessed here, but I'm telling you from experience that doing it this way is much better and a lot less stressful than just averaging into a position as it goes down, expecting that fourth wave. So that's definitely a lesson. And then on this fourth wave down, can you buy puts? I say, yeah, you can. But again, same thing. You don't want to be guessing up here. You want to wait for the first move down and you want to buy the retrace and then probably have a stop above the high. Knowing that it's a B wave, it could come up above the high and you could technically have a stop loss, let's say up here at 363, 1.23 fib. If it gets to the 372, you probably already stopped out. But again, you waited for the move in the direction you wanted to go. You bought the retrace, and now you have a short stop. Your stop loss is only $8, and you know you have potential to make all the way down here to 300. You're putting the odds in your favor. On this one, it goes to 328, pulls back to 315. Let's say it does break below 304. You lost $11, and you know it's not an impulse because it broke below the low, but you don't have the stress of catching this falling knife. So I can't stress this enough. It's kind of a small lesson, but it's such a small thing that really makes a huge difference. And I like to remind myself when I do it this way, I have more losses, but those losses are so small, and when I hit it, I get big wins. But when I'm doing it this way, if I'm buying Tesla shares at 325, 320, 315, 310, while it's likely the next move is going to happen, I still feel kind of stressed out because I'm down on my position, and now I have to rely on the market to go up. This one, I don't even care. I know I'm putting the risk reward in my favor, buying right here. So it's a simple concept, but it's something that makes a lot of sense if you want to cut down on the stress, cut down on your risk, and become a better trader. Wait for the move to come in your trend area or in the way you want it to go. Buy the retrace, and then hope for the next move higher. Ideally, you just sell right here. You don't even do the fifth wave. Go like this, sell right here. You might get this, and you might get that, but you don't want to guess on the fourth wave. And that's exactly what's happening right here. Fourth wave, if you're buying down here, you're guessing. If it goes like this, then you're screwed. You just lost more money than you should have. You have no stop loss. On a fourth wave, your stop loss can be going back into the first wave. But like, what happens if it goes down in the first wave and you get stopped out here on the first wave and it ends up being a diagonal? It ends up going like this. Oh, you just lost a bunch of money and you missed the uptrend. So that's just a little bit of a trading video there. Kind of help you out a little bit. Wait for the move to go in your direction. Buy the retrace. Stop below the low. This only works, though, on impulse moves. This doesn't work on corrective moves because corrective moves are going to be a lot of up, lower, low, like that. So it only works on impulse moves. On corrective moves, I definitely recommend that you use supply and demand and average into it, use standard deviations. That helps out a lot as well. So let me know in the comments if that makes sense to you. On impulse moves, you'll lose a lot less and you're going to gain a lot more. That's all I got in this video. Leave me a comment, like, subscribe for more updates. I'll probably keep this one open to the public, and let me know if it helps you out.